This is Business Edge. I'm Tolulope Adeleru Balogun. Nigeria's inflation increased yet again to hit an 11-month high. We've also heard about the digital economy and how it's creating new jobs. We'll get into the rise of the creator economy later on in the show. But let's start with the African business headlines. Kenya's Ministry of Transport has tabled bilateral air service agreements between Kenya and 8 countries that will see Kenya Airways expand its flight destinations to new markets. The ministry said Kenya had air agreements with the Czech Republic, Cyprus, Chile, Belize, Suriname, Austria, Tanzania, and Barbados. Cabinet Secretary for Transport James Machari says the bilateral air service agreements will enable airlines to expand their existing route networks by directly operating scheduled services to other markets. Tanzania's national debt has reached 69.44 trillion Tanzanian shillings from 60.72 trillion shillings in 2021 after the country borrowed 8.7 trillion shillings in the past year. This is equivalent to a 14.4% increase. Tanzania's Minister of Finance and Planning, Nguli Nchemba, says the increase was due to the country receiving soft loans for financing development projects. The debt also increased because of the release of special bonds worth 2.18 trillion Tanzanian shillings for the funding of the Public Service Social Security Fund debt derived from staff contributions before 1999. However, the minister said that while the debt increased, the evaluation report from November 2021 shows the debt was still sustainable in the short, medium, and long term based on international measures. South Africa's Mineral Resources and Energy Minister Gwadi Mantashe has said that the country is considering buying oil from Russia as a possible measure to mitigate steep fuel prices. A purchase is far from being finalized and would first have to go through a complex government procurement process. South Africa has close historic ties to Moscow due to the Soviet Union's support for the anti-apartheid struggle. It abstained from a United Nations vote denouncing the invasion of Ukraine, and last month, South African President Cyril Ramaphosa said bystander countries were suffering due to sanctions against Russia. According to the World Bank, Nigeria's currency reserves would decline in 2022 as the Central Bank of Nigeria aims to clear around $1.7 billion in FX backlog to foreigners and foreign exchange forward contracts. The World Bank said the country's reserves increased to $41.3 billion by the end of 2021, allowing for an exchange rate adjustment. It pointed out that boosted by higher oil exports, International Monetary Fund special drawing rights allocations in 2021, and a Eurobond issuance in September of 2021, gross official reserves rose to $41.3 billion at the end of 2021, offering an opportunity for exchange rate adjustment. And those are the African business headlines we have for you at this time. Let's talk inflation in Nigeria rising yet again. I'm back after this quick break. Extreme food price volatility has resumed in earnest, pushing Nigeria's headline inflation to 17.7%. The latest Consumer Price Index, CPI, has shown that food inflation soared by 2.01% month-on-month in May. The rate was a moderate 0.01 percentage points higher than April's figure. The CPI tracks inflation trends and patterns. Now, on a year-on-year basis, the composite food inflation was on the uptick, hitting 19.5% in May, which was 113 basis points higher than the 18.37% posted in April. The April food inflation was a remarkable departure from the sideways movement witnessed from December to March, when it maintained the 17% range. Food inflation is the highest in 8 months and suggests that the relative calm experienced during the harvest season is over. With a 4.6% gap between the core and food segments, the unpredictable trend in prices of food may be pushing up the composite index to the level witnessed in the first and second quarters of last year. Already, the inflation rate is at its 11-month high, and experts are predicting that the situation could be worse in the coming months. Now, let's move on to my guest. Joining me from Abuja, Nigeria is Oyekanmi Duyute. He's the Associate Director of Tax for PricewaterhouseCoopers. Ayo, welcome to Business Edge. Thank you so much for joining me.
Hi, good morning. Thank you.
So what we're seeing really is a trend, and when we emphasize the fact that the numbers that came out have hit an 11th month high, it really should come as no surprise. So let me first start with you on that. Were you surprised at all with the figures that came out yesterday from the National Bureau of Statistics?
We're not entirely surprised. I think we saw it coming. Ordinarily, this is a planting season, and like you rightly pointed out in your introductory comments, the harvest period seems to have moderated the inflation growth rate to a certain extent, but now it's those gains are now being reversed. So typically during the planting season, you see an uptick in inflation rate, and so that's in line with trend historically in the past, and that's really not entirely unexpected.
Okay, so the high that we've seen now comes even despite the fact that the Central Bank of Nigeria increased the benchmark interest rate to 13% in May as well. Beyond the issues around food, what are also some of the other factors that you think are contributing to this increase that we're seeing?
Well, the general price increase that we've seen over a couple of months. I think this is like the fourth straight month that we've seen increases in the inflation rate. The devaluation of the naira is probably one of the contributory factors because we then see import inflation, the uptick of that. Then also the Ukraine-Russian war that has significant impact on food inflation, as this has some kind of a destructive impact to the supply chain of food generally, globally. And knowing that as a country, we're largely import dependent on a number of food items, rice, wheat, sugar, and a couple of other items. So, so the impact of all these geopolitical developments all around the world tend to have negative impacts and contributed to the uptick in the inflation numbers.
So what we have seen, and I think we can all agree we're feeling it, is that the most glaring consequence of the inflation is the soaring price of food and services. And some have used the word food crisis. So I want to get your thoughts on this. Given the trends that we've seen and how the food inflation rate has risen in the past several months, do you think Nigeria has entered a food crisis, or there still is some time before we enter a crisis stage in this situation?
I think potentially that might be in the horizon, but my assessment is that it may not be in the near term. Like I said at the beginning, this is meant to be planting season, and expectedly during harvest, we expect that there will be an increase in the supply side of the food value chain, and that could then help to moderate inflation and general price increases. But if maybe due to security challenges, due to infrastructure gaps and all that, we're not able to fully take advantage of the planting season, then that may impact the quantum of what will be realized during harvest, and then that may then put Nigeria towards getting into full-blown food crisis. Of course, we already seen a bit of this trend in other parts of the world, in Sudan and many of the war-torn parts of the world. And if the Ukraine-Russian war is not, if the solution is not found in the short stroke medium term, then that could possibly aggravate developments around food supply generally. And it's just considering the size of mouths to be fed in Nigeria, over 200 million people, to then put in place the structure to be able to provide adequate supply of food could be a huge challenge. And if we take this side by side, the fact that there could be some form of distraction from politics, knowing that we're looking towards 2023 for the general elections, potentially the right level of oversight required to ensure Nigeria does not slide into such a terrible terrain might not be the focus at the moment.
So I want to ask a question that's basically one sentence, but I know in answering it's quite a complex and multi-layered answer you'll probably give me. But it's basically this. Is Nigeria losing a grip on its inflation problem? Have we gotten to the point where the policymakers, the regulators, those who make the decisions for the country simply do not have any new tricks to pull out of the box when it comes to inflation?
I think likely you're absolutely right. A lot of the contributory factor to inflation as we see today is mainly imported inflation, and that's likely because we haven't managed the economy well. An economy of the size of Nigeria is supposed to be about $500 billion or so, but probably down to about $450 billion, with loan in excess of $100 billion in between that period, and our foreign reserves revolving around $30 billion. Clearly, that's not sufficient. We should be talking about $100 billion and above. So we don't have enough, savings to be able to provide some level of stability in terms of our exchange rates. Clearly, it seems as if the direction the naira would continue to move is just on the other side, particularly with the level of productive capacity, basically almost completely import dependent. So, and of course, some of the conversations around the way we manage our oil revenue, a lot of it being wasted on first subsidy and not really investing in improving our productive capacity. That's then, puts the managers of the Nigerian economy in a very precarious situation where they have very little intervention that can adequately address the issues, at least in the short term.
Okay, I'll just hold the line. While it may be difficult to address the issue in the short term, will there be some long-term solutions to Nigeria's inflation problems? And then we also have to put in the conversation around the currency reserves with the potential that the FX backlog has to affect inflation numbers. We'll pick up the conversation after this. Still with me on Business Edge today is Oyekanmi, Associate Director for Tax at PwC. Now, the World Bank says Nigeria's currency reserves would decline in 2022 as the Central Bank of Nigeria aims to clear around $1.7 billion in foreign exchange backlog to foreigners and foreign exchange forward contracts. Now, Ayo, do you think this will have any effect on the inflation numbers or even the currency conversation in Nigeria's naira depreciating? And we've been witnessing that for several months now. What do you think this effect might be in the long term for this movement?
I think the way to look at this is to look at the items that basically make up the foreign reserve of Nigeria. So if a huge chunk over $1 billion is coming out of it, and if we look at it in the last couple of months, the accretion, the increase have been very minimal, despite record oil prices. And this is understandable considering the fact that we've been burning limited foreign reserves, importing much needed petroleum products. With a reduction in the external reserves, potentially we may see a further devaluation of the naira, and with imported inflation, the prices of goods and commodities would likely increase, particularly for those items that are not locally manufactured. Even for locally manufactured items, a lot of them have foreign inputs. So this will have a way of escalating the inflation situation. So the only direction where I see the inflation numbers going, at least in the short stroke medium term, is that the numbers will potentially continue to increase.
And so while we try to digest that and Nigerians think about what higher food prices and higher inflation means for them, on Tuesday, the World Bank said the current inflationary pressure would push an additional 1 million Nigerians into extreme poverty by the end of this year. And this 1 million is separate than what the bank predicted in terms of 6 million that are already predicted to fall into poverty this year because of the rise in prices, and that particularly focuses on food prices. So when you look at the inflation figures and you look at the prediction of how many Nigerians will fall into poverty, what picture does it paint for you of Nigeria's economy or the current state of Nigeria's economy?
I think it just shows very clearly that as a country, we have no intention whatsoever, to take off, that perception that Nigeria is the poverty capital of the world. At a point where the president recently, a couple of years back, said his plan is to take out about 100 million Nigerians out of poverty. And every day, we see with higher inflation numbers, with low productivity, with security issues, with deplorable infrastructure, clearly low or non-existent productivity. So the poverty numbers just continues to increase. So clearly, what do I expect to see? I expect that the managers of the Nigerian economy will roll up their sleeves and stop just the lip service of diversifying the economy and really go down to work. Even with just from the agricultural sector alone, we're able to address the security issues and then get the people moving, and be able to improve our productivity significantly. Then we may have a chance to be able to turn things around. But as it is, unfortunately, that prognosis, that projection by the World Bank may possibly come to pass, that we have additional 1 million people going to poverty and living on probably less than $1 a day.
And
sadly so.
It's interesting because Nigeria seems to be a paradox for everybody, for Nigerians and for those who are observing as well from outside. Interestingly enough, the country's growth prospects seem to have improved in the past 6 months, but that also comes as inflationary and fiscal pressures have also increased, leaving much of the economy quite vulnerable. How can these two sort of contradictory statements or contradictory things exist side by side? A country such as Nigeria, which we all know has potential, but you have these growth prospects improving, but yet the economy is in the states it is, and Nigerians are living how they live. How do you think these two can exist side by side?
I think what we're seeing is some kind of growth that is not inclusive and that is not targeting the critical sectors of the economy. I think the growth it is being projected is probably driven by the high oil price, and if you look at it, what's the value of the oil sector to Nigeria's GDP? To what extent have we been able to domesticate the oil and gas sector of the economy? How many people are being employed, within the oil and gas sector of the economy. So to me, I think it's a matter of being able to get the critical sectors of the economy move, agriculture in particular, manufacturing sector, putting in place the kind of policies, that would get the Nigerian population working again, become productive, and contributing to to the gross domestic product of the country as a whole. So really one way to address inflation is to basically produce yourself out of inflation, and not so much around some of the monetary policies that we've seen. For example, the CBN has increased the interest rates. Basically that will then make the cost of raising capital to be higher. So that will then possibly have a negative impact on the productive capacity of the economy. So it's a bit difficult to be able to look at both sides and come up with the right policies. But we need really some structured approach to ensure that we get things right this time.
All right, so you've said already before that you believe that in the next month or two or three, we should expect that the inflation rates will continue to climb. There's not so much that can be done because particularly of the external factors like oil prices and the Russia-Ukraine crisis. And you've mentioned now some of the policy things that can be done. So I want to hold you to this as we wrap up now. The short term is what a lot of us will focus on because that's what many Nigerians are facing, a day-to-day existence, trying to manage for the short term. Is there anything that can be done in the short term to help protect Nigeria from more of these external shocks and to sort of ease the pressures that the economy is feeling? We can't wait so much for the long term. Many Nigerians may not have the long term to wait. Is there anything to be done in the short term?
Yeah, I think in the short term, first I'll start with the government side. I think the subsidy issue, we need to address it. It's probably the most significant expenditure profile in Nigeria today, probably 4 trillion, 6 trillion number, in 1 year. So I'm not sure there's any sector of the economy that would get that quantum of allocation. So we need to find a way to resolve that and not postpone it any further. On an individual basis, then we need to look at ourselves and ask ourselves, can I do more than what I'm doing at the moment? Can I be more prudent with the limited resources I have? This is not the time for frivolous spending, and particularly with those who have responsibility for managing the economy. This is not the time to go borrowing and spending the money on frivolities. Whatever we're borrowing, we need to channel it to the appropriate sectors of the economy where growth is much needed, those aspects of the economy that can absorb and reduce significantly the level of unemployment, those sectors of the economy that can increase the aggregate supply and ensure that Nigeria, we're able to substantially increase our productive capacity. So I would expect that each and every one of us will contribute our own little quota. Maybe behind your house, you should have a small garden where you could tend some vegetables. I'd like to see our president, doing something beside Aso Rock, contributing his own quota to food, ensuring that we have sufficient food supply. And the way to do that is that small-scale farmers, large-scale growers, all of us will all roll up our sleeves and get involved and then become productive.
All right, Ayo, thank you so much for joining me today on Business Edge.
Thank you very much for having me.
And the World Bank has given Nigeria some advice on how to address its issues. It says the country needs to reduce inflation through a sequenced and coordinated mix of exchange rates, trade, monetary, and fiscal policies, including the adoption of a single market-responsive exchange rate. The country should also address mounting fiscal pressures at the federal and sub-national levels by phasing out the petrol subsidy. That's up again. And redirecting fiscal resources to investments in infrastructure, education, and health services. And Nigeria should also catalyze private investment to boost job creation by improving the transparency of key government-to-business services and eliminating trade restrictions. Those are things Nigeria can do. But now the conversation is around, will the country do it? Will it continue to be business as usual as Nigeria's inflation and food prices continue to climb? You're watching Business Edge. Oyekanmi Onabanjo is standing by to give you the latest in international business stories.
Welcome to International Business News. My name is Oyekanmi Onabanjo, and we start by telling you that the Bank of England looks set to override its worries about a sharp slowdown in the British economy and raise interest rates again on Thursday as it tries to tackle an inflation rate on course for double digits. After the U.S. Federal Reserve upped borrowing costs by the most since 1994 with a 75 basis point rate hike on Wednesday. The big question for investors awaiting the BOE's June policy announcement is the size of the increase. Financial markets are fully pricing in a quarter percentage point increase in bank rate to 1.25%, but investors have put a nearly 50% probability on a half-point rise by the BOE, something it has not done since 1995. Now, the BOE has already raised borrowing costs 4 times since December, when it became the first of the world's major central banks to increase rates after the coronavirus pandemic. Let's take it to Asia now. We take it to Asia now to tell you that Asian stocks mostly rose on Thursday after the US Fed got tough on inflation with its biggest rate hike since 1994. But the Hong Kong market slipped after the city hiked its interest rates following the Fed's move. Japan's Nikkei 225 climbed 1.4% and Korea's Kospi advanced 1.3%. China's Shanghai Composite edged up 0.2%. Hong Kong's Hang Seng Index opened 1% higher, but soon reversed gains and headed down 0.5% from the previous day's close. In line with the Fed's move, the Hong Kong Monetary Authority on Thursday increased its policy rate by 75 basis points to 2%. Let's also tell you that China's State Planner said on Thursday that it had approved 10 fixed asset investments worth 121 billion yuan, that's about $18.1 billion in May, a more than six-fold jump from April as policymakers seek to get economic growth back on track after a COVID-induced slump. Data suggests that activity in the world's second largest economy is beginning to pick up again in some sectors after widespread COVID-19 lockdowns in April and early May. But the outlook remains uncertain, particularly for cities like Beijing, which are still trying to bring caseloads down to zero. Now, most private economists believe China's economy contracted in April to June after growing 4.8% in the first 3 months, and the government has vowed to achieve positive growth in the second quarter. In other news, Google for Startups has launched a new £3 million fund to invest solely in black founders in Europe. Last year, Google launched the inaugural £1.5 million Black Founders Fund to address the racial inequality in venture capital funding between 2009 and 2019, when just 0.2% of VC funding went to black-led startups in the UK. This year, it is doubling the fund to £3 million. The 30 startups backed by last year's Black Founders Fund have raised an additional £65 million in follow-on funding and expanded their headcount by just over a fifth. The new fund will be invested across 40 startups, one-third of which are led by women, and each will receive $100,000 in non-dilutive cash, up to $200,000 in cloud credits and ad support, as well as one-on-one mentoring by industry experts. We also tell you that drivers around the world are tolerating record high prices for fuel as mobility tops expenses for now over other spending in squeezed household budgets. Data shows that high prices have not yet breached the pain threshold for drivers in major demand centers, but that might change once US drivers have to pay more than $6 a gallon and crude oil prices exceed $140 a barrel, which analysts say could happen by the end of the year. Now, consumers have been changing their driving habits, with some opting not to fill their tanks to capacity, but this is yet to dent overall demand for fuel. And that's it on international business news. Do stay with us. We have something for you, and that has to do with the emerging trend in the tech world. Definitely we get to bring that to you after this break. You're welcome to the segment on Business Edge. Now, let's tell you that this week's tech conversation is looking at a new term that is gaining momentum among creatives all around the world, and that is the creator economy. Many hubs are looking at various ways of expanding the narrative, particularly among Generation Z and millennials who are driving the creator economy forward through their online behavior, as well as what marketers can do to reach out to them. So how real is this creator economy in the African context? Let me tell you that Douglas Kenderson, our guest this morning, founder of Seller.co, is joining us to unpack this particular discussion. You're welcome, Douglas.
Hi, thanks for having me.
Okay, so let's understand what is actually the creator economy, because we've heard of different kind of economies and different kind of people coming up with different means and ways to generate money, as it were, and to create ventures. But then when you talk about the creator economy, what does it actually mean?
Okay, so with the creator economy, it's very straightforward. It's an economic system built around individual creators. And the whole idea is that these creators build an audience, they build a following, they build or customers in that way, and then they get to monetize them. They can monetize them via paid sponsorship, because if I have 10K followers, someone can pay me to reach that audience. They monetize them via digital products today. So maybe you cultivate an audience that's interested in something, then you release an ebook that they will pay for, or a course or training, whatever it is. Basically, people monetizing their audience.
So definitely it's a new trend that is coming up, but I would like to understand or know, would you say, according to your experience, are young Africans tapping into this resource? Are they coming up with some sort of creative ways to also be a part of the creator economy ecosystem?
Yes, I mean, so the thing is, we have over maybe 30,000 creators today, and all of these are young Africans. And the point of that is these people make ebooks. So it's monetizing your knowledge or monetizing your skill. So let's say I know how to be a good writer and I teach people how to write. I know how to be a good dressmaker, I teach people how to dress. I know how to garden, I teach people how to do that. And there's so many spheres. And when you think of the knowledge economy and all the things that people know, and I think if you think of Nigerians in general, they're very enterprising. There's so much knowledge that you teach people locally, but then also you can export internationally. And that's really what this whole system is built around.
All right, so like you mentioned, we have ebooks, we have NFTs, we have different kind of creatives. So tell us, how do they actually monetize these digital services?
Okay, so I'll give you an example. Let me see. You're a good anchor, and then there are a bunch of people that probably follow you on Instagram that are trying to be anchors tomorrow, and then you host a class. And you can host a class for, let's say, 5 or 10K based on however you want to price it. And people pay, they attend the online class, they get knowledge. You can decide to, okay, you hosted this class, it had 100 people in it, and first of all, that's already one way to monetize. And then the second thing is that you have a recording of that class. It's very rich, and you're like, oh, all the people that came from my class loved it, they had a great time, they've used it, you package that as a video course, you sell it as a course. Or let's say you make a checklist or make an ebook and all of these things. That's typically how the monetization works. All
right, beautiful. So you talked about online. So I want to believe that a major of these kind of businesses are premised on online derivatives. But then let's understand, what is the role of the social media? How does it play up this particular discussion?
Yeah, I mean, social media is very key to this, because that's the only, I mean, it's one of the biggest ways you can cultivate an audience today, or have an audience today. I mean, except you're doing email, there's really no other channel in which people can find you online, except maybe you have a WhatsApp group or you have Facebook or Twitter following. So this cannot even work without social media, and social media as we know it today. And as social media keeps growing, as new platforms keep coming up, it creates more avenues for membership, for communities, and for people to feel like they're connected to you.
Okay, so tell us, Douglas, I'd like to know how viable is it in terms of being inclusive? Because some people feel that the creator economy is elitist. So tell me, is it actually for everyone or a selected few?
I mean, I'm glad that you asked that question, because I know that if the example I just gave, I said you're a business anchor, it seems like you definitely core expertise to do that. You actually don't in most of those cases, because on Twitter, I was giving an example about when people pay for comfort. If you think of doing laundry at home, you're like, it's paying for comfort, I don't want to be stressed. But even people pay for comfort for knowledge. It's not like a lot of things cannot be on Google, but I've seen a class that teaches people how to use a Google form. And you think that's something you can just find on Google, but packaging knowledge is it's not exclusive to people that are super smart, and people have so many ideas, people have so many things that they know. And one of the misconceptions is people always overestimate how much people know in general, and then that's why they think, okay, I cannot charge for this or I cannot pay for this. But once you realize that people don't know that much, it helps with this.
Okay, so based on what you've said, I think I would have to start developing my skills.
No, you definitely should.
In this conversation, in this line of field. But then I must say thank you so much, Douglas Kendison, for joining us on Business Edge.
Thank you, my pleasure. Thanks for having me.
All right, so we've heard of Generation X, we've heard of the new generation, but right now we are talking about Generation Z, we're talking about millennials, we're talking about creator economists, so to speak. And now you would want to say that this set of of people are creating different kind of avenues to make money via the social media platform. So I would like to ask Tolu what particular generation she belongs to, because when you have this sort of conversation around people coming up with different kind of creative ideas and they are monetizing it, then probably something that we all should start thinking about and start looking towards. So tell me, Tolu, which generation do you belong to?
Right now, I'm currently generationless because I would definitely not reveal my age on it. But I get what he's saying in terms of the innovation coming forth. And while it is for everyone in terms of this creator economy, I think we also do need to take away that not everybody is making the money that people want to make. So let me share this with you. Only the top 3% of YouTube creators yield more than $17,000 per annum in advertising revenue. And for them to do that, they have to average about 1.4 million views per month. And YouTube is at least one of the platforms that shares some advertising revenue. You have other platforms like Pinterest, Twitter, TikTok, and Snapchat that don't. And so the creators on those platforms have to look for alternative ways in which to monetize what they do. And that's where brand sponsorship and influencer marketing comes into play. And I've seen some of the work that goes on behind the scenes. And while we might just think we're laughing and they're just sharing a 15, 13-second clip, there is a lot of work to make what they do happen. And I think definitely we're going to see a lot more in terms of the growth of the creator economy, especially here on the continent, where people don't have to get formal schooling. They can sort of follow their passion into it and in a way get paid as well. So leave the generations aside. Let's just look at how we can make money from it.
Of course, call it the unconventional way of making good money. All right, so Tolu, you can take it from here now.
All right, we are going to take a quick time out now, but right before that, we do have something for you. So, you know, Nigeria's issues, unfortunately, can be quite daunting. One of those issues is the electricity situation. Nigeria's national grid collapsed and crashed from a peak of 3,703 megawatts to as low as just 9 megawatts on Sunday, June the 12th. The grid had collapsed twice in March and twice again in April. And the issues with Nigeria's power situation are unfortunately legendary. But they're not only happening here in Nigeria. Across the continent, there is a conversation around electricity provision. And that's why you see the rise of renewable technologies. Now, this next report is going to look at energy production, especially in remote locations, and how renewables could be changing the game.
Africa is undergoing a period of accelerated economic growth and transformation in response to global pressures and demands. The availability of energy is a fundamental requirement for Africa to be able to foster and harness its sustained growth and achieve economic and social development. The International Renewable Energy Agency has estimated that by 2050, the continent will be home to at least 2 billion people, almost double its current population.
I'll start with Nigeria. Alternative energy has now become almost, the only type of reliable energy that we have. I will give an example. As you can see from this chart, it's called the kilowatt divide. Brazil has a population of 202 million, and they have over 100,000 megawatts of electricity. Nigeria, with almost 180 million people, has only 11,000 megawatts of electricity. South Africa, on the other hand, has 53 million people with 47,000 megawatts of electricity. And we say we want to be like the Asian tigers. South Korea has 50 million people and an installed capacity of 103 megawatts of electricity. You can see from this chart that there's a real wide gap.
Africa's rapid economic expansion creates a daunting energy challenge, combined with rising expectations of improved resilience and sustainability. Finding a sustainable way to meet growing energy needs is one of the core developmental challenges for the continent.
The challenges are many, from Forex, trying to source Forex, because as you know, in Nigeria, we don't produce so many things, especially in the renewable energy sector. We're just beginning to produce solar panels in Nigeria. But large and by, we import most of the solar panels, the inverters, the lithium-ion batteries. But we can assemble some components here. So just, trying to source for the Forex in which to buy this product is a major challenge.
Africa is rich in renewable energy sources, including hydro, solar, and wind, among others. And the time is right for sound planning to ensure the right energy mix, as decisions made today will shape the continent's energy sector for decades. Bettina Nweli, News Central, Lagos.
And there's a report from Bettina Nweli looking at alternative energy. Lekon joins me now. We have a few stories we're keeping our eyes on, and let's see what those are before we wrap things up.
So on NC4 to watch, let's start by telling you that local airline operators in Nigeria have said that a number of them now risk collapse barring availability of affordable aviation fuel to sustain commercial operations. They said besides the fuel is being bought at the prevailing market rate of 690 to 614 naira per litre, which is said to be unsustainable. Vice President of the Airline Operators of Nigeria, Allen Onyema, at the ongoing Federal Airports Authority of Nigeria National Aviation Conference in Abuja, did warn that if the present challenge of aviation fuel was not fully addressed, about 3 airlines may quit operations due to unbearable costs of operations. Away from that, we'll tell you that food inflation has recently been attracting a lot of media attention in South Africa as concerns grow about people's ability to afford basic foodstuff. Food price inflation attracts considerable attention because we must all eat, and periods of high food inflation affect poor households the most. This is because they spend a higher percentage of their income on food. When it comes to price rises of general products, households can simply refrain from buying non-essentials, but this isn't true when it comes to food. The only choice for households is to substitute expensive food with cheaper alternatives or to buy less and reduce the amount of food that is put on the table. Now, after having been first conceived in 2017, the Development Bank Ghana was finally launched this week to help catalyze growth in the country's small and medium enterprises sector. Ghana wants the new bank to ease the access to credit and finance for its SMEs, which comprise about 80% of businesses in Ghana, by providing loans with tenors greater than 3 years. An estimated 1 to 2 million SMEs in Ghana are estimated to generate some 70% of GDP. And finally, the World Bank has approved a loan of $474.4 million to help South Africa purchase COVID-19 vaccines. A joint statement from the bank and South Africa's National Treasury said the projects will retroactively finance the procurement of 47 million COVID-19 vaccine doses by the government of South Africa. And those are the stories that we are tracking on NC4 to watch. I hand over the baton to Tolu to wrap up the show.
Thank you so much, Leka, and thank you too for joining us today on Business Edge. Don't forget to follow us on social media. Download our mobile app. Make sure you subscribe to our YouTube channel and watch us on the platforms we are available. We'll keep conversations on the African economy, business, and finance going right here on News Central. And at the top of the hour, News Central now comes your way with all the latest news and information from here on the continent and beyond. Until next time, I'm Tolu Lokwe Adelaru Balogun. Do have a fantastic day.